what has caught your eye this morning?
Well, I'd like to say one thing first. If anybody in the White House is watching, yesterday can be easily explained with no tweet on trade, stocks close higher. So if you want to get that message to the Oval Office, that will be helpful. Obviously, the comments out of China dispelled the concerns. Everybody was arguing about were there Chinese phone calls or not. Now we've gotten an overture.
I don't know that I call it an overture. It just appears that they're not going to respond with retaliation.
But they did say...
And it's the same language they've been using, and it's the same language that was used last week by the vice premier when he said we don't want an escalation. I mean, the market seems to be taking it as a positive. I don't mean that, but I'm not quite sure it's a real change.
Well, I think the market is seeing it as an overture to resume talks. And you're right, much of the language is the same, but the very thought that we were not nose to nose and gun to gun has given the market a little bit of relaxation. It doesn't take much. I don't think you need extra stretching. You just need no negative news, and the market responds. You saw in the rally yesterday that they went after all the things that had been beaten down very badly. The Russell was a big performer, so the market knows it's a little bit oversold on this stuff if we don't go back into the tariff and trade war situation.
Yields are up.
I was going to say, we've been talking about how it's, the market has actually kind of absorbed a lot this month in terms of the concerns about recession and what bond market yields have done without necessarily falling apart. So, I mean, where does that leave us? We're kind of maybe going to get up toward the top end of this August range today.
Yeah, I think that would probably be the reaction that you see here. If they can hold these overnight gains, actually they started about 3 o'clock this morning. And if you can hold those gains, I think you'll be in relatively good shape. The inverted yield curve is slightly suspect because this time it's for a separate reason. Usually before a recession, the Fed has been tightening rates so that the short end moves up above intermediate to the longer end. In this case, the longer end moved down to go under the Fed. And that's why you have a lot of people calling for a 50 basis point cut just to deal with the yield curve and not to deal with anything else.